What is going on, everybody, and welcome to another Beta Memoirs and another interesting day in the market. Has it not been over the past month and a half? It's been quite the entertaining month, I must say. Today was no different. There was so much sideward action. It was ridiculous to say the least. Apple was probably my biggest play today. I know Square was something I was looking at this morning, but it took off even before the bell. And even at that point, we just sold off and then just chopped all day. Miss Yellen stepped up yesterday. That was something else she did do yesterday, was she did talk about raising rates and then essentially walked back everything she said. Before she closed out yesterday. I know some more numbers came out today that weren't the greatest. There's just a lot of news recently. It's really been kind of aiming essentially towards inflation. Apparently, the market doesn't like that. We've been talking about this for over a month and a half now, and still the market, I guess, is now starting to digest it and see that it's actually occurring, since it's actually been really brought to the attention of the Fed from this point, are been pinpointed by the Fed and actually saying, yes, it's actually a thing, and not doing anything about it. I know Powell has been talking about actually that this would happen, that we'd get these spikes in inflation and they go on and off again. Again, pandemic and everything else on top of it, not only just printing money, but pandemic and supply and demand. Just been a lot of issues. So nonetheless, we've had a pretty rough market, to say the least. Scalping and some overnight swings. I swung Apple and Tesla overnight. Ended up getting out of both this morning. The calls did well last night. So did the shares. Tagged out of everything. I tried to get into coin, got tagged out on that one. The market, it just has no idea where it's going. We're still playing range, although we did sell off towards the end of the day, which was quite interesting. I actually want to bring the charts up from this point, because ultimately, I don't have a big watch list for tonight. I think it's more of a kind of sit and watch. Not every day is a day to trade. I do have a small watch list. Here I have Tesla, Facebook, Lemonade, and Shop. Tesla primarily because it's a leading indicator for tech, I think. Facebook, also pretty much a lead indicator on where we could go. I know it will give way a lot quicker than Tesla will. I would say Apple as well, but Apple's been kind of doing its own thing. It's been up a lot some days and down a lot some days. We closed essentially today right back where we were yesterday. Lemonade is actually at a good support. Shop, I'm looking at, if we do start selling off, I'm looking at Shop under 1,000. That is where I'm going to start looking to buy shares into Shop for a longer term swing at that point. But we really have to see what is going on with the markets. Again, inflation concerns and everything. There's more talk about another stimulus check coming out, which could even be more worrisome for a lot of people. So we really have to see what we're doing tomorrow. Again, if we're going to continue to chop, very well could chop until some of the stuff plays out a little bit better. Tech, though, with this inflation talk, has really been taking a hit. A lot of the earnings, a lot of them have taken a hit. I know even Rocket fell below estimated price today as well. And so Rocket home mortgages and stuff took a dump as well. PayPal did well after earnings. So we could actually look at Square tomorrow as well. Although if the market's going to start tanking, I don't know if Square will hold, to be honest. It really just depends on how we open up tomorrow. So again, I had those couple. I had Tesla, again, SPY. So you could say it's still playing range. What's really holding it up? It's hard to say. BA's kind of been bouncing back and forth. JPM The banks, they were doing, JPM did well today. For the most part, the banks seem to have been holding. But everything else just kind of died off. Like I said, coin actually helped for a while. That's why I got back into it. But then again, broke even towards the end of the day, or midday rather. We started pulling back pretty hard. Tesla, like I said, has actually been holding this range. I've been wanting it to hold because it looks like there's going to be a big breakout. But at this point, it looks like it might actually be to the downside on the daily because of the fact that there's all this bad news coming out at one time. I would actually expect this to break up, but there is a lot of good things coming for Tesla fundamental wise. But with inflation and stuff, you're looking at normalization. So some of these crazy prices that we had for Tesla, they might be normalized. And that's, again, what we're seeing. We've been seeing a lot of these dramatic sells and stuff anytime inflation comes up. And essentially that's might be where we're at. It's normalization and why a lot of tech is essentially getting wrecked at this point. But I'm watching Tesla again for a lead indicator. Again, one of the ones I always pretty much watch to see if we do break this. If we do break this, I think there's going to be a lot of selling occurring at that point. Facebook at great support. If we do happen to start going back up, look for Facebook to break this wedge pattern. It's been holding this really well, this 200 around the 313 mark really well. Definitely don't want it below that. It's got some speed bumps on the way down, but then at that point, I think you're looking at 300 entry, which I would really like if we do fall that far to perhaps load up there. We'll tight stop because we don't want it below that particular point. Lemonade is another one. I brought this one up a couple different times, but it's actually at a really good support. It's at a pretty strong support right now at this 80 mark. We'll have to really see what happens here. Again, we don't want it to break below this. So that will be something that'll be interesting. If we do head back up, Lemonade would be a good one to get into, in my opinion. Perhaps go back and retest that 100 mark. And then, like I said, Shop. Shop is one I've always liked. I remember when it was at 250, now it's over 1,000. So being said, it's been holding this support at this around this 187 mark. But ultimately, my price point for Shop, anytime it really does dramatic sell-off, is anything below 1,000 because it recovers quickly once it hits below 1,000. Now it's developing a new base, so I'm not really sure if it will even reach that point. I think if we start heading below 1,000, I think the market in general will be hurting pretty bad. Again, the market in itself, it was looking for a strong pullback. We kind of got that, and then we pulled back overnight, which was expected. Again, I don't know if that was just going to be a bounce. It looks like actually after hours we're starting to push back up. So we're going to have to see how that plays out. If this is just retesting here, retesting support, and see in the morning. Ultimately, I would like a little bit of a gap down, back down to this zone, and then play the bounce in the morning. But if that does happen, I would look for a higher low at that point. We have been hitting higher lows here, so that's something to keep in mind. We don't want to continue this trend going in the future. I know there's still a lot of money in the system. This big bullish move that I've been talking about, it will happen sometime this year. Again, there's been a lot of different sticking points that you have to be aware of. And also crypto, I think, has been taking a lot of the money. It's been a lot of money flooding into crypto. That side of the house has really been moving, where stocks have been kind of stagnant, not so much volume. But being said, I think you're seeing that transition between normalization and the changeover to the different asset, money being taken out of the market, being moved over to the crypto side. So I think that's what we are also seeing on top of everything. And then you got meme coins like Doji and also GME and AMC, specific ones like that have kind of like really messed with the market. The market really hasn't been the same, in my opinion, since the whole GME push up and that crazy run when it went to 500. I think it was 500. But nonetheless, That's what I'm pretty much looking at tomorrow. Just be careful. I am not holding anything. I am in crypto at the moment, which I'll start doing some more crypto videos for you guys this weekend. But being said, the market in general is just kind of, it's in a holding pattern. There's a lot of information. It's not real dangerous. I mean, SPY again doesn't look bad, but tech again is taking a wallop because of the inflation talks. Again, as soon as inflation talks come up, whenever you hear it, it just starts selling dramatically. And considering we broke a lot of different support here, this particular support yesterday was not a good sign. We kind of retested that. We got that dead cat bounce, and then now we're starting to head back down. Be interesting again to see how far we drop with tech. Tech did have a pretty decent run, whether it was towards the end of March and beginning of April. Again, I think this is what we're looking for, is these moves. You get, what was that, about a week of running, and then we kind of been stagnant, and now we're starting to sell off again. So this might be the new market. And to be honest, on the daily, we might be building another. On the daily, we don't look the greatest either. I mean, we're actually on the 50 now. So being said, that can be worrisome. If we do break the 50, this 328 mark, we could look to start selling. 300 is a possibility. There's many other supports down the way, but typically once we break that 50, which is our last support, EMA, we got quite a bit of selling to come at that point. Sometimes we find a stronger support, maybe 309, but ultimately we do get a good reversal off that 200. That's why I do like to play the 200 at this point. We're going to have to see what's in store again with all the inflation and everything. Talks has just really been holding back tech in a big way. So with that being said, again, manage risk. There's not a lot going on for me tomorrow. Watch lists, the more of those are indicators to try to figure out what the market is doing. We've been kind of trying to do that through the past month and a half. So just be aware of that. Again, this is all new. Market changes. These are all new changes. You find that when you're looking at the markets and learning about the market, you again have to adjust, right? Because even you know the basics, but you have to understand that the way the market is operating is completely different. There's always something new injected into the economy, especially now. The economy is really changing because they got a new asset class, which is your cryptos. And so you got a lot of money floating around. You got innovation, you got growth, you got value, and that transition in itself. And then you got normalization on top of everything with inflation. So there's a lot of different moving pieces here that are new and incorporating into what is in the market. And again, this happens every year, every couple of years. There's always some dramatic changes. And so the market is never quite the same. And so one year you might get some really bullish moves like we've gotten last year, especially in the recovery. The market just went up at that point. You could essentially buy anything and it just went up. And then now it's more of this chop. So you get a chop and then you get a burst up, or a chop and a burst down. So just be aware of that. Be mindful of that. And again, if you are investing for the long term, fundamentals, stick with that and continue to average down when you can. So again, pick your primary growth stocks or value stocks and go from that point. So being said, remember to drop a like button and subscribe if you haven't done so already. And until next time, guys, I will see you guys later.